Hello and welcome to Growth and Value Stocks. My name is James Boyd. We welcome you here today on this February 18th. Just a quick heads up, my voice is a little sore. I was a little bit under the weather. Should have just been working anyway. That's why I normally do. So we have Connie Hill with us in the chat. We welcome her and we welcome all of you here today. I want to kind of go over some key things as far as some pullbacks that we're seeing in the market to different moving averages. Also want to kind of talk about some of those past and current examples that we could look at as well. Now, first off, there's a lot of things that are not going up. So we want to be very aware of that. I also want to kind of really be mindful of market conditions and recent volatility. So all things are not equal. And so we'll be looking for those areas that are really still exhibiting growth, value. We might even throw in occasionally income from here and there. Now, just remember, Connie and myself, all of us coaches, we do post educational content on X. There's my handle. Connie will post hers in the chat. That way you can click on it and just follow her as well. Now, remember that the information here is provided for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. The paid money software is provided for educational purposes only. It allows us to engage in simulated trading. When we talk also about dividend-paying stocks, which we might bring up, also understand that these dividend-paying stocks, they may reduce or stop paying dividends. What it doesn't say is they could raise them. They could cut them completely. They could actually provide maybe like Costco did, a special dividend, okay? So there's a lot of just variance there on dividends. These are not like fixed income payments here. Also understand that investing in stocks involves risk, and also when we talk about examples, they are just that. Now, we'll talk about kind of the growth, value, income. We're going to spend a little bit more time in value and growth. There are some stocks in the growth that might be trying to bounce back. I want to share with you kind of some scans that I like to look at when things have kind of pulled back somewhat. Let me share that with you. Also, when we talk about really growth, value, and income, these are kind of some sample definitions we might be actually looking at. If we're kind of more in a rising VIX environment, growth will probably not do that well. If we talk about we're in a rising VIX environment, value and income, probably more income than value, probably would do pretty decent sometimes. Not all the times. Lately they have. Value and income actually went to brand new highs just 4 days ago. If we're talking about volatility falling, well, that would actually be, in this case, growth would probably outperform the value and income. So there's different times when actually these kind of categories make more sense. Let's first off go take a look at just the market in general. Let's start with just real quick SPX, okay? So if we looked at SPX, if I were to ask you a question, what do you think the short-term trend of the SPX is? What would you say? I think a lot of people would say, James, it kind of looks a little bit more neutral, okay? And I would agree with you, okay? Now, when we look at the S&P 500, that's not completely telling the whole picture per se. We're not looking at the S&P 100. We're not looking at the mid caps, okay? But the S&P 500, we'd say a little bit more neutral. I think to also get a little bit more clarity, I think when you go back to, let's say, a weekly chart on this, let's pull that up for just a second, if I can. And if I pull that up, if we take a look at, let's say, a weekly chart, let's put that back to weekly. Here's what the 3-year weekly is really showing on a kind of a more standard 10-week moving average, 30-week simple moving average. Kind of still shows that rising upward trend. However, we have lost some of that momentum in the shorter term, and that's kind of why on the daily chart we're kind of seeing that neutrality in the price action. That could also be coinciding with the recent earnings on many stocks, some good, some bad, but the net effect is sideways. You got to remember something. If we got neutral short-term price movement, that means something's going up, something's going down, offsetting each other. Now, if we go back to just real quick the mid caps, when you look at those mid caps, they do look a little different. Now, we're not trading futures. We're actually looking at just kind of the price level. Different ways we can look at this. If you look at mid caps, the mid cap 400s, those are pretty much, well, they're within 1% of the high, okay? And remember, over earnings, you might say, look, I don't want to pick any individual stock. I want to maybe buy a couple stocks that are trading underneath the ticker. Some people might like to choose that. When we also take a look at, let's say, the NASDAQ itself, which has been underperforming, it still is. When you take a look at the Dow Jones, the larger caps, that kind of looks like it's a little bit of a bounce, okay? Bounce where? Well, it kind of bounce on where it broke out from. Are we starting to get that bounce? 494 being the area. How far are we off the high? Not much. Go back to the prior high, answer we're within 1% of the all-time high. Why does it feel so bad then? Isn't that kind of how it feels? Like it goes down 2%. It's like, okay, that's how it feels. Okay, like you don't want to give anything back off the high. You know who you are, including myself. Now, when we look at, let's say, the Russell, this kind of looks like it's putting up a little bit of a fight, right? The pullback, the little run to the upside, little pullback, not making a fresh new low, and a little push right there. On the right-hand side, trying to get a little moving average crossover. Not above the middle of the W yet, 2,700. But my gosh, it wouldn't take a whole lot to actually knock us to a brand new shorter-term higher high. More of the story, the market's actually putting up a little fight. We're getting some help from volatility falling down here today, which was elevated over the last couple of days, which is, you want this to go down, okay? We take a look at the TNX CGI, which this is going to relate to value and income stocks and growth as well. That's actually been going down. That's been helpful, okay? So if there's been any tailwind to the equity market, it's rates falling. Utilities, real estate, anything that would be very sensitive to interest rates, most things, okay, some more than others. You're going to see that real estate, I think, made a brand new high yesterday, but who was watching, okay? Now, I want to also show something just real quick. When we also talk about just super quick on the sector front, okay, I'm going to include the semiconductors as a sector. Well, kind of like if you look at the volume, it kind of feels like it, okay? Does that look like a bearish pattern? What type of pattern does that look like? Type all those answers right now. Put your fingers on the keyboard, type it in. What do you see? Kind of looks like a ascending triangle, okay? Now, if we went back to also, let's say, the energy space, does it look bearish? I don't know if it looks bearish. Pull back in the shorter term. Crude oil itself, Brent oil, okay, those actually look kind of bullish. And if we look at, let's say, base materials, which we'll spend a little time on, it kind of looks like it's in the flag itself. Now, remember the moving averages we have on the chart, they're shorter term moving averages, the 10 and 20, and they're whole moving averages. So the rope, if you will, is very, very, very tight to the price. You pull this up on moving averages that have a little bit more of a lag. That's what the basic material looks like. Little bounces all over that moving average. Last one I want to bring up just real quick is second to last. Okay, industrials, that doesn't look bearish. Wrong. And if we take also a look at, let's say, those real estate, you're going to see that the real estate $ IXRE, you're going to see this down 1%, but that's what I mean yesterday. That hit a brand new high yesterday. Now, well, the question is, what's the difference between Brent oil and crude oil? It's just the type of oil. It's the thickness of it, where it's from, okay, things like that. Kind of the qualities of it. All oil, definitely not the same. Now, I want to also kind of go back to just some things that I think would be helpful, okay? So when we take a look at the market, some of the areas that we're going to kind of spend some time in is we will look at some precious metals. We will also look at maybe perhaps some real estate. I also want to spend some time in some energy areas as well, okay? Now, a couple things when I was off on Thursday, Friday, Monday was President's Day, and then Tuesday. A couple things that I was looking at, okay? I want to make sure you're kind of aware of a tool that you have at your disposal. If we go to, for example, I'm going to pull up the paid money count, and I just want to make sure that you're aware of this. Tell me if you are, okay? Now, why does this matter? Well, I'll show you, okay? Now, what I'm going to do in this case is I'm going to bring up a ticker. Let's go PM. Why are you bringing up PM? Well, because PM, Philip Morris, that's one of the stocks that's in the paid money portfolio. It's sitting right there, Okay. Now, what I'm going to do is when you're talking about trading and or investing, you really want to check how well are you following your rule set. Do you see anything in kind of the chart, entries and exits that you did that kind of might tell you some where you're deviating away from your actual sample plan? Let me just show you two examples just real quick. Now, historically, you used to have to go back and like look at the trade history, kind of go back to the chart. Just a quick tool that I like to look at, and I looked at over the last couple of days. And it's interesting how it shows you an interesting story. If you click on that little settings gear right there, you're going to see where it says show trades. Now, if you pull up a chart in which you have never traded before, there's not going to be any trades. But we have PM. So if we have traded PM, there must be some trades on PM. Now, it might just be an entry only. But if I go if I click on right there where it says show trades, and now go to apply and then okay, you're now going to see in this case the recent trades that were done on PM. So let me kind of tell you first off, when we look at this, when we have a pullback or a consolidation, is that a bad sign to kind of see some buys down near horizontal support? Maybe not. Okay, so that kind of tells us that maybe the entries weren't necessarily bad. It probably tells us that we were also maybe trying to do maybe a horizontal support bounce, a horizontal breakout. You're going to also notice that we sold 150 shares on kind of where the moving averages were red. Kind of tells us the timing of that. We can go back and verify. This one kind of is interesting because it looks like a little bit more that we have like a target, because if you go back and look at that exit right there, it looks like it kind of sold it really on a green candle, which is almost like selling it right into a brand new buy signal or a current buy signal. Now, what happens now if I come in and I just kind of come in right now and say, you know what, we have a moving average crossover negative, I'm going to sell it. Well, if we do this, if I say create closing order, sell it, okay, confirm send, and sell it. Let's go back to the chart just real quick. And now what you're going to see on the chart, just kind of show you this, and there's going to be a homework assignment with this. You're now going to see the timing. So my purpose on this, if we went forward, let's say 2, 3, 4 days, etc., if this moving average crossover becomes more and more, I'm checking like where was the exit, and then what was my sell signal. Now, if I said my sell signal is a moving average crossover, and let's say 2, 3 days from now, crossover even more, we can see some more deviation from the moving averages, I'd say the sell was pretty good, okay? Now, so first off, did you know about that, okay? Now, as a takeaway assignment, what might be a takeaway assignment? My gosh, go back to some of the stocks that you like to trade and go look at the entries and exits of those. I'll show you another one just real quick. If we look at, let's say, Simon Property Group, SPG, you're going to notice that now on this right here, I'm just going to move this stop out of the way for just a second. It's going to show us a green arrow where we got in. So what am I trying to find out? What am I trying to validate or confirm? Well, that arrow right there is telling us we got 41 shares at 194.21. Well, how come we don't? That right there is the stop. How come we don't actually see a sell yet? Because it hasn't sold. Now, if we did not get out in this crossover, this is kind of telling us most likely we're not doing a short-term type of trade. We're trying to get more of an intermediate type move, maybe days to probably more 2 to 3 weeks. Does that make sense? All right, so how do you take it off? I mean, that's always the question. Click on that gear right there. We're now going to come down to where it says show trades again. Show me that. Click on the settings, show trades. And by the way, I'm going to tell you, not every ticker you pull up, you're going to be completely proud of. I could have sworn on 1 or 2 of my tickers recently, I could have sworn someone literally was on my computer. So I'm telling you, so here's the thing. It kind of tells you, it kind of like it puts a mirror in front of you and says, okay, are you getting in when you think you're getting in? This is confirming it. Are you selling when there's a sell signal? Or are you selling on entry signals? Shocking. Okay, now the second thing I want to kind of bring up here just real quick, let's take 5 minutes. I want to share these scans with you. When we actually get pullbacks in the marketplace, some of the scans that I actually like to look at, I'm just going to share them with you. 5 minutes or less, let me give you 3 or 4 scans, okay? The scans are really going to be dependent upon what type of moving averages you'd like to look at. I do think it is worthwhile if you said, I don't have these, let me give these to you, because when I looked at the market here today, there's a lot of things that kind of look interesting. We'll hit that up 5 minutes or less. So when I actually see things pull back, I like to look at, let's say, a scan that's built on a 10-day exponential moving average bounce, okay? A 10-day whole moving average bounce, a 20-day simple moving average bounce, more lagging, right? And we actually also see like the trend line breakout scan. Now, I'm just going to focus on these 3. Now, when you look at, let's say, a 10-day EMA bounce, I'm scanning in the S&P 500, so I'm scanning the whole thing. Now, obviously, if we said, well, which one is going to be, which moving average will be the tightest of the price? It's the whole. Second would be EMA, and third would be SMA. Let me actually give you the whole first. I just want to make sure you have this, and we're going to look at then candidates in just a moment. So that's the scan right there for the whole. Sent that in the chat. Let me actually go just real quick to personal. Let's go to EMA. There it is. Let me actually just send this out to you. Share. Okay, this is the 10-day EMA. Okay, and by the way, step 2 of homework, load these on your side, on your platform, and actually take a look and see what you're finding. Now, what I'm going to do is let me show you the last one, 20-day SMA bounce. Now, the biggest thing I will say on this is looking for the 100-period moving average above the 200, 50 above the 100. So it tells us something about the intermediate and longer-term trend. And then there's the 20-period moving average. If we're talking about timing, we're looking for the high is greater than the high from 1 bar ago. So in other words, bouncing in the last day. Now, let me send that one out, and then we're going to look at some examples. So if I do this, let me share. Yeah, there it is. Share. Okay, so the first link in the chat, cool, they're all together. First link in the chat, 10-day whole. Okay, second one is 10-day exponential. And the third one is really, in this case, it's the 20. If you actually said, James, how do I actually put that on my side? You could actually go to shared items, okay, setup, open shared items, preview. And what I'm going to do is I'm just going to call this class, okay, scan, 20-day SMA, import. Now, when I do this, where does it go? You're going to see that it shows up in its own little page right here. And I could save that. I could save that scan query, okay? Now, I didn't scan for anything yet. If I click on scan, there's the list. So I say you scan. Like anything where someone's like a script or a scan, set up, open shared items, same way, copy and paste from there, and you can just save it, okay? Now, what I want to do is I want to kind of show you a couple of things that kind of were standing out a little bit, okay? So 2 tools that we talked about so far. So number 1 is I want you to go back and look at your recent trades. Now, don't beat yourself up. Do not beat yourself up. It's a learning tool, okay? Where did you get in? Where did you get out? You might ask yourself, where was I when the entries were? Am I late? Am I on time? And the same thing with the selling. Now, when we talk about the bounces, I want to talk about some bounces that I saw from this morning. Well, now, by the way, what we can also do is on the left-hand side, I'm going to bring up, let's say, a list. I'm going to go to personal. Now, when you put those in the scan, they can also show up on the left-hand side where you could say, pull back to SMA, 20-day SMA, etc. You could also put them right there. Now, let me kind of go back to that precious metal list for just a second, okay? Now, we know that for some people, okay, those precious metals, they've been acting like a consumer staple. Now, the rocks, whether it's copper, silver, gold, etc., they're not necessarily, they don't have dividends, okay? And if and they don't have earnings per se. typical kind of, they're actually, they have sales, okay? They have earnings. It's a little different. I mean, we're talking about rocks versus actually maybe Coca-Cola, okay? But if I actually bring up, let's say, one that kind of is showing a potential bounce, it's really AM. Now, the one question I get sometimes is, why didn't you do this earlier? Because all the trades we're trying to do in class, okay? Now, if we zoom in on this, now what you're going to notice is this will come up in the bounce scan. This is where I found it. So I share with you the bounces, okay? Whether you like different types. Not all of us like the same types of bounces as far as duration, moving averages, etc. Now, if we look at this, on the right-hand side, what you're now going to notice is, I want to kind of look at some information. Where we gap down to the open price, that's the first level of resistance. We've held above that, okay? Where do we gap down from? 215. What you're now going to notice is when we got above really that 202 area, shorter term higher high, we went to the area where it fell down from. We were able to stay above the 202. Look at what the stock did in terms of staying above its 20-period moving average. Also note that on the right-hand side, a little green dot. So we're going to ask ourselves a very basic question. It doesn't have to be complicated, okay? So first off, when you get the gap down, we always say keep an eye on the open of the red candle. That's the first line of resistance. If it gets above that, some of the bearishness is wearing off, okay? Now, when we look at this, we're going to circle the most recent, listen to that word, most recent, okay, red candle. All right. Why are we getting that green dot? Well, because we're trading above the high of that low day, okay? Now, if we take a look at this, okay, obviously, if we look at, let's say, AM, it's going to be tied to gold and silver. Now, we're not looking at the futures price to trade the futures price of gold or silver, but it is a kind of a sentiment gauge, if you will, momentum, trend of what they're selling that might influence the fundamentals of the business. Now, the fundamentals actually could be like maybe if the company changes their forecast. Second, might new investors want to get in, etc., if they think that trend might continue and so on. Now, we've already gone past the earnings. If we look at this chart, what I'm going to do is on this is I'm going to bring this up right on the pre-money count. We're going to go AM. We're going to right-click on the chart. We're going to go down to Buy Custom and go with OCO Bracket. Now, if we do this, I'm just going to go with Stop, okay? Now, if we do this, let's go back and let's kind of look and see where do we see the support area. That support area recently is probably right underneath this area, probably about 208, okay? If we take, let's say, 208, okay, 208.28 less 2%, it's going to be ballpark 208.28 less 2%, got about 204, 204.11. So I'm going to type that 204.11 right there so you can see it on the chart. Type that in right there, 204.11, dated GTC, okay? Capital-wise, right? If we said, hey, we're going to try to actually invest about $8,000, which is the full position size, that's going to give us, in this case, about 35 shares of stock. Now, in this case, so we're saying buy that at 223.05 or less, okay? If we purchase the shares, sell the stock if we go to that price or less. It doesn't mean it's going to sell at exactly that. Okay, no need to get emotional about this. Fair enough. Now, so if you take a look at that, that's a trigger sell. Confirm send, send the order. No, I'll fix it. Now, I'll fix that order. But let's go back to this actually page right here, monitor. Where was that actually order? So the order, and it canceled for some reason, I'll fix it. Let me just go back and show that on the chart. 223.05, and then the stop. Okay, there we go right there. Now, I also want to go back. I'm not going to do it, but if we also go back to, let's say, NEM, right? If we kind of said, hey, there's one that's right there and it's maybe not above that resistance line yet, it's really NEM. That one actually does have earnings, but you got to understand that some of these companies are probably, for example, going to be looking at each other's earnings. If someone said, I want to kind of find something that maybe hasn't made maybe the move yet or broken resistance, it's really NEM. Okay. Now, I also want to go back to this list real quick. Let's go back to that list. Pull this back up. A couple of these other stocks, I just kind of want to see where they are. Now, what I'm doing is I'm just clicking on them. Okay. Now, if we kind of said, James, a lot of the stocks we look at, they're always higher price dollar stocks. Can I, for example, can we look at a stock that might not be as high? Well, let's go back to just real quick. Let's look at a kind of a more recent moving average crossover. Now, when you say recent, remember the kind of tools we talked about to kind of gauge what was the timing? Well, one of the things we like to do is we like to go to that little test tube right there. And if I click on the test tube, you're going to see we call them whole label bubbles. So in other words, we're trying to gauge really the timing. So if I actually go over here to where it says the bubbles, click on that little settings right there, go show bubbles, we're going to say yes. What does that do? Well, it labels really the number of days the moving average has been green or red. So if I pull this up and now I say okay and then click on apply, we're now actually going to see if I do that, put that right there, yes, okay, apply. And behind me, you're going to see that there's the bubbles right there. So if I said, hey, what about that timing? Well, that was the first day. Now, by the way, it's the 10-period moving average. So if we said, hey, our timing is really good, we'd have to really say in this case, I'm not sure how good it is because we're technically about 6 days into this. But if you said, well, James, I wanted to get in when actually both moving averages were green. I wanted to also see in this case where there was a crossover as well. Okay, fine. We're still into that probably 3 to 4 days. Now, if we're talking about, let's say, a shorter term high. Now, how do we take that off? We're going to click on those bubbles, click on the settings right there, go back to show bubbles, click on no bubbles, click on it, and now let's go back. Now, I want to also kind of talk about also another way of timing to evaluate your timing. One of the charts we're actually using is looking at are we hitting a shorter term breakout, right? Well, if we take a look at this, we're probably hitting a 10-day high. I mean, if we're talking about timing. If we looked at kind of like a bounce, it's showing a bounce right here today. If I actually went and said, hey, let's go to that second chart in, this is going to tell us the number of days. Let me just go back, double check something. Yeah. So this is going to show us, that's looking at a 10-day high. Now, if we go back and look at that, where is that 10-day high? It's right here. And when I say here, we're talking about where we're literally about, 50 cents away from hitting that target? Now, if you said, well, James, I want to get in if we hit that line, well, what type of order would we use? Simple, buy stop. Now, what I'm going to do in this case, I'm going to do buy stop limit. We're going to say buy stop. In other words, buy if we go to this price or higher, okay? Buy if we go to this price or higher, but we're going to put a cap, okay? Now, what type of cap? Let's kind of use a proxy of maybe like a quarter, 50 cents, okay? Now, if I do that, right-click on it, okay? Let me bring that up right there in the paper money account. I'm going to bring it up. And let's go to ticker B. Now, by the way, would you find that on the moving average bounce as well that I gave you? Yes. Going to right click on that chart right at where that line is. Okay. That orange line represents the 10-day high. We're going to try to trade a high. If we get to that 10-day high, we're going to go buy custom. We're going to go to where it says with stop limit. So if we do a buy stop, we're saying buy if it goes to this price or higher, meaning you're thinking it's bouncing up or it's breaking out. Just because it hits that price does not mean it's going to go up higher. That's what you're thinking, but it might not. Hence why the investor would have an exit just in case if it did not. Now, on the order, we're going to change that limit to a stop limit, okay? Now, if we take a look at that, if we said, where is that 10-day high? Answer is it's at 48.94. So I'm going to type in 48.94, put it right there. And if we said, look, I'm going to make it, I'm going to make it where that it's 50 cents above the entry. So it's allowed to fill in this area. Buy it if it gets to that price or higher, fine. And then a cap or a ceiling. Now I want you to imagine you send a friend of yours down to a car auction and you tell them, look, this is the car I'm looking for. I know it's probably going to be about this, but do not keep bidding up the price any higher, or don't buy it unless if it goes above this price. I don't want to buy that. Same idea here. Okay, you're allowed to buy in this range. Okay, you're putting that. If we don't go to 48.94, it's not going to buy. Has to go to 48.94 or higher to fill up to 49.44. Okay. Now, when we talk about that stop, when we talk about that support area, that support area most likely is going to be right around this ballpark, 45.51. Since it is lower than 45.51, less 3% because it's below 50. If we did that, I'm going to take 44. That would be 40. Now you can see it right there. 45. Okay, 51. Less 0.97, 3% less than 45.51. And you're going to see that stop price 44.14. Now I'm going to type that in right there, 44.14. Let me just confirm that. Okay, that looks good. Now, if we go back to, I'm going to go back to this. I'll put in that so we know for sure it fills. When we talk about capital size, if I said capital size, let's say no more than $5,000. Well, $5,000, how many shares would that be? It'd be 101. I don't want 101. If we're that close to 100 and 100, just do 100. Okay, so there's 100. Dated GTC. Now, I'm going to tell you what happens, okay? When things pull back in the market, people kind of mentally check out a little bit. They're kind of emotionally down. Now, I want you to imagine that you worked at a large asset management firm. And you've been doing this for 5, 10, 15, 20, 25, 30 years, right? You kind of have an idea of what's called behavioral finance. So if I'm feeling like, my gosh, the trend has been absolutely horrible, that's true. What I just said, the trend has been. Okay? So in other words, my feelings as an investor are based upon what's recently been happening. But that doesn't necessarily mean that going forward a week or two from now, that it might not be different. Now, it could be the same. But the moral of the story is whatever happened recently, that's what we think is going to happen in the next week or two from now. Because that's how I feel. Okay? That's not always true. That's welcome to a bounce. The bounce is the investor usually feels like emotionally in the dumps. Okay? Down, if you will. And then it bounces, and then look back and say, man, if I wasn't so emotionally in the dumps, I would have bought. So you have to learn kind of what are you emotionally going to feel like because it recently went down. And then you're going to ask yourself, I see a buy signal, but I'm not sure if I should get in. And you got to remember is that every entry you get is going to have risk to it. I don't care if the stock's going straight up. Okay? So the question really comes is, are you willing to actually risk about $5.30 per share? And if you had 100 of them, would you risk $530? That's the question, okay? Now, we could put a target on this and actually say, look, I'm going to try to sell the target at the prior high. Noted, okay? We're going to go confirm and send. And what we're now going to go ahead and do is send the order. Now, remember on the stop, if it goes to that price or less, sell it. Do not be confused here. The sell is not valid until the stock is purchased. Okay, does that make sense? Now, James, where did you find this example? On the scans that I gave you. Okay, just tried and true. Now, you're now going to see on the chart, it's going to put the buy stop limit. Notice it says 48.94, buy it if it goes to that price or higher. And there's the cap level of 49.44. So the buy stop, the line is at the cap. 48.94 is where that line is right now. That make sense? Yeah, comment from Philip is, can you share your workplace setup? You know, I'm glad you actually brought that up because I think kind of having a workplace where you feel like you're efficient, it's super important. Like, before I get into workspace, okay? So I like to run, and this is just me. I run a 16-inch MacBook computer, 36 gigs of RAM. The gigs of RAM is important because if you have 2 or 3 screens, you might not have enough horsepower on that computer to run the screens. That's the first thing, okay? Having a computer that actually has some gigs of RAM to run the charts. I mean, you got to start there. That's the motor, okay? Some people like to actually have maybe like a 24-inch screen, if you will, on the left, 24 on the right, and maybe an iPad or another 24 on the right-hand side. Now, that's not the workspace you're talking about. But look, if someone's going to be in dentistry or architecture or whatever, I mean, having a basic setup is important. All of those screens are not super expensive. If you went out and kind of looked at them, it kind of depends upon how good you want the screens to be. Second, talking about the workspace that you're bringing up. The workspace that I'm bringing up is on the left-hand side. Let me just first explain this. When we look at the left-hand side, I'm not saying we're trading futures, but we look at the futures list because overnight we can see what those prices are doing. Those prices, whether it's gold, let's say precious metals, whether it's oil, whether it's actually equities, whether it's interest rates, those can affect the equity market. So that's why those are the top. Now, if I actually pull this up on the left-hand side, that's why I label this on the left-hand side, number 1, futures. Again, we're not trading futures. We're looking at the price levels, okay, and the trend. When we actually look at this second, why do I call it the second list? Well, that second list is indexes. Third list is sectors. Now, the fourth list for me is industry groups. Follow us on Friday. And then Dow, NASDAQ, S&P 100 or 500. Okay? Now, you're going to notice so those are the lists I like to have on the left-hand side. I like to have symbol, last net change dollar amount in percentage, and the trend. This is trend on daily. Okay? So let me repeat this. We're going to have the prices up top. You don't have to trade that. You're just looking at the price levels, indexes, sectors. We would add industry groups if we could with the tickers we talk about on Friday when we talk about ETFs, but that's not this class. Dow Jones, next list, NASDAQ, next list, S&P 100 and or 500. Okay? This right here, when we talk about the market watch, these column headings are really what is on my X page, okay? The X page actually has the column headings, and so when we pull up a list of stocks, whether it's an index list, a sector list, an industry group list, a list that we scan for like today, etc., it's going to take the list and then kind of look at price performance, what type of trend that it is there relative strength? Are we seeing a bounce? Is it a breakout? What about the moving averages? Is there a flag and or a breakout? So all of those things the investor would like to say, look, I like to kind of evaluate. Each column is evaluating something a little different, but it's all on one page. Now, I'm explaining that to you because if I go to set up, save workspace as, I just really label mine as, let's say, JB 2026. I don't, for example, think that, and I just label it by year. So that way I could always go back and find it. So you can, now, by the way, the one thing to note about workspaces, you could actually say, look, I have a workspace that JB 2025 or 2026, that's my bullish workspace. You could also have a workspace where it's bearish, meaning it's going to change the column headings to where you're looking maybe for some bearish technical analysis. Or I have, let's say, similar listings of watch lists, etc. But the column headings are going to change if I change it to JB fundamentals, where I'm now looking at price multiples, ROE, ROA, all the above. So don't think that when you have like a workspace that it can't change. Of course it can change, okay? So if I went into JB 2025 fundamentals, it's going to be changing the column headings. And it's going to and so that's something you can actually do there. Okay. So I want to kind of just show you that as well. And you can flip back to the other one as well. Okay. Hopefully that kind of answers the question. I'm not going to share with you the workspace, but if you I gave you the tools, kind of explained to you the layout, and you can just make the layout. And the key is once you save it for yourself, go to Setup, Save Workspace As, and just label your own workspace. Now, what I'll do is I'll try to share the workspace, and then you kind of tell me if it can pull it up for you. Okay. But I want to explain it, because if I explain it and you understand that, then you can just create it yourself if you actually need to. Now, the biggest actually thing is when we actually go back to this, let's pull up just real quick the list. And when I changed workspaces, it changed my list, okay? Now, first off, any other questions? Now, a couple stocks that, for example, I just want to kind of have us keep an eye on, okay? Well, a couple stocks that I want to kind of have us keep an eye on over the next couple days. Some of these actually... semiconductors, I'm just sorry, when I changed the workspace, it kind of, I'm going to bring back up the chart. Couple stocks that have been quite strong. ADI, okay, has been quite strong, going in earnings. FANG, okay. Now, FANG is also going in earnings, but you got to remember something here is when you take a look at this, FANG has actually been one of those names that hit a brand new high here today, going into earnings on the 24th. MCHP, okay, this one has kind of been up near resistance, has not broken out yet or closed there. Keep an eye on this, because if we get like one red candle down and it pops right back to the upside, this would be like a hold that would be turning into potentially a breakout itself. Now, also, when we look at other stocks, let's say GM, by the way, this is in the bounce list, GM, it's kind of been like a horizontal, if you will, channel there. It's kind of bouncing off the moving average or crossover in a range. And the last one I'll make mention of here is stock like Halliburton, okay? These are stocks that kind of similar to the example that we pulled up from FANG, does not have earnings coming up. If that oil can actually push to the upside, could that influence Halliburton, the stock, and so on. So, by the way, the other last thing I'll say here is having the charts, and I'll send this as well, and I'll put this in the description as well. Having these charts is important because the charts are like your tools in the toolbox, your toolbox as well. Okay, I'm out of my time here today. I'm sorry that you actually saw me crying when we were talking about putting in that first example stock, okay? Now, when we talk about the examples, the paper trades that we actually did, they were examples. Well, practice. Remember, today we focus on how do you see your past buy and sell signals on the chart first. Second, we actually talked about 3 scans that I shared. Different moving averages, pullbacks to certain different moving averages. Starting to see a couple stocks bounce near those ranges. And also with that, I want you to go out and practice Yes, setting up your workspace, because again, the more comfortable you are, you kind of have a sense of every day is not different. You have a routine, okay? And getting comfortable is very important. Hopefully that actually was helpful here today. So I'm out of my time here today. Stay tuned for our next webcast coming up right at the top of the hour. Quick reminder that you can remember that you can subscribe to the Trader Talks channel right on YouTube. You can go right to this page, subscribe if you have not already. Second, if you say, hey, can we actually see, let's say, a playlist from this class? The answer, absolutely. This is a playlist from where you can see other classes that were taught as well. Feel free to follow Connie and myself on X as we post content as well on X when we're not teaching. So I want to say thank you so much for your comments and your participation. Today we did talk about kind of some growth examples and also some psychology of what does it feel like to kind of handle a pullback and being disciplined to the plan, okay? With that said, remember that all investing involves risk, and this has been the class on trading growth and value stocks. Stay tuned for our next webcast coming up next. Bye-bye.